What's going on, everybody? It's Stas here. So the stock market did extremely well today. Despite yesterday's little flash crash in the last hour, the S&P 500 up 60 points, up 1.7%. The Dow Jones up over 500 points, up 1.9%. And the NASDAQ 100 also up 1.9%, up over 200 points on the day. And if you guys weren't watching the markets yesterday, we saw a flash crash. S&P 500 took a big hit after the president ended up tweeting out that he is not accepting the stimulus package. The Democrats want too much, $2.4 trillion. Republicans wanted $1.6 trillion. And obviously the market right now is pretty reliant on the stimulus, and this was not good news for the market. So we're going to talk more about that in this video, break down some technicals, and I also want to go over what I personally did today and the top stocks that I'm looking to buy right now in the month of October in 2020. So a lot to go over today, guys. If you guys find value, as always, hit that like button for me, subscribe to the channel, and make sure to check out the free links down below if you guys want to join the Strive Smart community, the Discord chat, the Facebook group, and if you guys want 2 free stocks from Webull. And by the way, that 2 free stock promotion is running out here on the 15th of October, so go take advantage. Just deposit $100 and you get 2 free stocks valued up to $1,600. So without further ado, let's get right into the video, starting off with the S&P 500. And notice, guys, it's crazy. S&P and the markets in general, NASDAQ and Dow, you'll see here in a second, they filled the whole gap from yesterday's little flash crash. Literally, the whole loss was gained back today. Take a look here on the 5-day, 5-minute. Yesterday at about 2:45 p.m. on the East Coast, as President Trump ended up tweeting out that, saying he's rejecting the stimulus, and again, the market's heavily reliant on this. Once he tweeted that out, the market S&P went from 3430, which we've been talking about, that's a big resistance on the S&P right now, all the way down to about 3350. That was a crash of about almost 80 points, guys, about 2% on the S&P. And another thing we mentioned yesterday about the S&P 500 is, despite this crash that it saw, it was still holding the uptrend pattern over the past couple of days at a higher low. You guys can see it here for yourselves. But of course, yesterday, we didn't know if it was going to hold it into today or if the floor was going to fall out even more. But once we saw the gap up this morning and the S&P break above 3380, that is where it really turned bullish, right? And you guys can see it for yourselves. We broke 3380, we gapped up, and we ran all the way up to 3430, again, pretty much erasing all of that loss from yesterday. And now we have to see if 3430 is going to break. This is huge. I mean, we've gotten rejected here all of September pretty much, and now into October. So for the bulls to take full charge on the S&P, 3430 is going to need to break. So we got the little crash yesterday, and now, and people are arguing, and I kind of agree on this, you know, now we're seeing the markets come back because Donald Trump, the president of the U.S. here, he ended up going on Twitter and saying, oh, we need to pass this bill, we need to give funding to the airlines, and now he's kind of changing tune from yesterday and saying that he's willing to sign right now again. So yesterday, him tweeting that out, it was definitely, and maybe not for sure, but come on, guys, it probably was. It was a negotiation tactic, right? What he was talking about yesterday on Twitter. So now it's arguable, you know, are we going to get stimulus before the election? Are we going to get it after? It's nobody knows, right? It's up in the air, but at this point, it's looking like Trump is, he's willing to, you know, get something done. And again, yesterday was probably most likely 95% a negotiation tactic, right? And this guy, I mean, he's a businessman. He's big on negotiations, playing chess, right? chestnut checkers. He's probably 5 moves ahead of everybody. So he knows what he's doing to get what he wants done, which is obviously at this point to become president and, to get stimulus. And for him to become president, him passing stimulus, that is definitely a plus on his side to become the president, right? He kind of needs that at this point. That's arguable. So overall, that's what's shifting the markets. Yesterday we got the dump, now we got the recovery, and we'll see how stimulus does end up panning out. And again, watch for 3430 on the S&P. If we break that, I'm 100% certain we're going to rally a little bit, right? Because that's a big level of resistance. It's going to cause some momentum. It's going to, right around 3430. And when it comes down to the Dow Jones today, actually, believe it or not, it actually hit a high when it comes to this hourly chart. It broke yesterday's high at 28,300-ish, roughly, and we erased all the losses, right? We held a higher low, we gapped up, ended up breaking 28,200. So at this point in the short term, the Dow Jones, the bulls are in charge, no doubt about it. And some upwards targets here for the Dow. Now that we broke 28.2 and we actually held above it, we might be going, let's say, 28,400. That's a big level of resistance coming up, stemming back from the 25th of August and the 15th, 16th of September. Maybe if we break that, 28,700 could be coming. And ultimately, the big resistance here is 29,200. That's roughly where the Dow ended up getting rejected back in the beginning of September. So if we break that point, that is where the Dow could be going to all-time highs, which is right around 29,500. And it's crazy. Some people might not even know this. I'm sure many of you guys do know this, but the indexes, they're all at all-time highs, or not now, but they hit all-time highs, except for the Dow, because the Dow isn't as tech-heavy as the NASDAQ and the S&P, right? And obviously the tech stocks have led this rally, which is why the NASDAQ, S&P, they've hit all-time highs, and the Dow really has not. So that's kind of a market update here. When it comes down to the NASDAQ 100, 11,500 is still a big resistance, guys. I don't know what is going to happen. I do know what's going to happen. I think if 11,500 breaks, we're going to see a nice pop, same as the S&P at about 3430. So at this point, I need to see that break. And this is a big resistance stemming back from the beginning towards the middle of September. So we need to see it. And if that does end up breaking, we might be going higher. And now, guys, take a look. We talked about this before. The reverse head and shoulder, left shoulder, head, right shoulder. This is literally forming, and again, it could be a breakout, and that would be the completion of the right shoulder, and the NASDAQ 100 could end up anywhere from 11,700 all the way to 12,000. I think that's possible here with the NASDAQ over the next couple of weeks, let's say. So that's the market update. Let me know in the comments, what are your thoughts overall with everything? Trump on Twitter, the negotiation tactics, what's going to happen with stimulus. Let me know in the comments. I'd love to know all of your thoughts. Now, let's talk about what I personally did today, and we'll go over some stocks in a little bit that I want to get into, I want to buy, and today I almost bought some of these stocks, but I'm still a bit hesitant, and we'll get into that in a little bit, but I did end up buying one stock today, which is INTC, also known as Intel. And this is one that I've been watching for weeks, guys. Weeks on weeks on weeks, ever since this ended up crashing after earnings report, and with the whole AMD scenario where AMD's getting ahead of Intel right now. They're like a couple years ahead or whatever. But that's kind of more a different topic. But that's kind of what ended up crashing Intel stock. And I've been watching it ever since, pretty much ever since the end of July, beginning of August. And I finally took a position today as I've been watching it and talking about it here on the channel, I've been saying, guys, if it breaks 51, 52, this is where it could really start gaining a full head of steam, and that's kind of where I've been saying I'm interested in taking a position. So today I finally did. I bought in at $52.25. That's where my limit order ended up filling. This was earlier in the day. As you guys can clearly see, the majority of the rally did come earlier in the day. So I'm holding on to Intel, and we do have another big level of resistance coming up, although we did break it today. But I want to see it 100% hold 52.50 and move up to 53.54 before adding more money into it. But I figured today's little break earlier above 52.50 and its approach to that point, I figured this is a good time to add a little bit, nibble a little bit. And the way I swing trade, guys, is I don't jump in all the way 100% with my position. I actually get in sometimes when I'm being really conservative, maybe 10% at a time, but other times, maybe 25%, maybe 30% of my position is at first. So in this case, I'm going a bit heavier since Intel is just beaten down so much. And even at $52, despite it rallying from 47 up to 52, I mean, it's still beaten down considering before the crash, it was trading at the mid-60s on average, right? It was at 69, down to 40, popped back up to 65. So 60, 65 is where, I'd consider actually offloading some shares as a longer-term swing here. So Intel, I'm holding on, and that's the only new position I took today. I mean, Virgin Galactic, I was down yesterday. We talked about that in yesterday's video. I ended up, getting in a couple days ago at 21.30, 2 days ago actually, and I was about to take profits yesterday. It ended up tanking right before I was about to take profits, and today we ended up doing well. I mean, Virgin Galactic up almost 4%. And at this point, again, I'm in at 21.30. I'm still holding on. I think there's a higher potential here with Virgin Galactic. And even after hours, guys, it's back up over $22. So that's looking promising here. The bulls are slowly gaining their edge back on Virgin Galactic, and yesterday's dump ended up proving as a pretty strong signal for the bulls because we held 21 bucks. We gapped up above it, and we pretty much held it at a higher low. I mean, that is a very bullish sign here with Virgin Galactic. So I'm still holding on $21.30, and I'm still looking at some options at January 2021. The $25 calls and the $30 calls. Did not pull the trigger on those quite yet, but I'm considering it here, guys, in the next couple of days. And I'm also still in Workhorse, EA, as well as Apple stock here, guys. These have been pretty staple, three staple positions here in my swing portfolio as of late. Workhorse is looking pretty good here. It's kind of priming up for a rip, in my opinion. We're getting out of this wedge. You guys can see we're consolidating pretty nice base at about 24 bucks these past couple of trading days. So we need to see at this point, do we gap up? If we get any sign of a gap up, a couple percentage points pre-market, that could, really signal a breakout for that day or for the next couple of days. And overall, this 1 hour 180 SMA is a big resistance right now, so I'd like to see that breakout for Workhorse, and I could see it run high from there. And overall, I'm in at about $24, so break even now on Workhorse, and EA is one that I'm not getting crushed on it. I'm down about 5%, but I'm down a decent amount. It's trading at about 125. I'm in at about 131, so I'm down about $6 per share. But like I said before, I scale into positions, and EA is one that I'm willing to maybe add more onto. And overall, this is a longer-term swing for me. I'm looking at it as the new Xbox is coming out, PS5 is coming out, bunch of new games are coming out with insane next-gen graphics, which they're blowing my mind, I'll be honest, guys. And for those video game people out there, what do you guys think about some of these next-gen graphics? They're pretty incredible, and I'm not too much of a gamer, but I do enjoy it on my spare time. I do have an Xbox, and I do plan on getting the new Xbox and a bunch of new games. So, I mean, let me know your thoughts. But overall, EA is definitely one that I want to hold here. So, and also with Apple, same thing. iPhone 12's coming. We have an event here on the 13th, which, what's today, guys? I'm losing track of days here. It's the 7th of October. So 6 days away. So what? Next Tuesday we have that event, so that could be a big day for Apple. So I'm watching out for that, and I'm in Apple at about, I believe, 115. So I'm right around break even on this one, and you guys can see Apple's creeping up into a wedge here. So watch for 118. If 118 breaks on Apple, oh man, that could be a big breakout for this particular stock. So let me know your thoughts down below. What did you guys end up doing today? What are your thoughts on my positions? I would love to know. Now let's talk about some other stocks. I have 6 here in particular, starting off with Disney. We got some news today that Daniel Loeb, and I might be butchering this guy's name, but he's a big investor. He has I don't know if it's a hedge fund, whatever. He runs a fund, and he's calling for Disney, and he has a big position in Disney, and he's calling for them to suspend the dividend to reinvest more in the business, and more particularly in streaming. So he wants to cut the dividend here with Disney, and for me, guys, you have to look at it like this. This might not be a good thing. Actually, a bad thing, rather, because Disney is going through a lot right now. They actually announced that they're cutting 28,000 theme park jobs. That was back on the 28th of September. It said in a statement that the CV uncertainty was exacerbated in California by states' unwillingness to lift restrictions that would allow Disneyland to reopen. Disney furloughed some park staff in April as well, but actually they're continuing to pay healthcare benefits, which I guess is good. That's really good, actually. And the new job cuts of about 28,000 domestic employees, and 67% of them are part-time workers. So they're struggling as a business. And you have to understand, what is a dividend, right? A dividend is a piece of the company's earnings that's being paid out to shareholders. It's being paid out to shareholders as kind of a thank you for holding the stock. And what happens when you guys get that dividend? You actually have to pay taxes on it. So if you think about it, if they're reinvesting that dividend back into, instead of giving it to you as a shareholder, back into the business, A, you don't have to pay taxes on that money, and B, if you guys understand what I'm saying, I know a bunch of you guys know what I'm saying, but this is kind of the growth versus the dividend argument, right? Oh, you're paying taxes on your dividends. You might as well let them reinvest it back into the business so you don't pay taxes on it and they grow the business from within. That's kind of a little argument there. But if they just reinvest that, it can help them with streaming, which is a big war with Netflix. It could also help their struggling employees keep some jobs, maybe, I don't even know, there's a lot of opportunities. I mean, they can do this, they can do that with the money. So he wants them to just suspend the dividend, which in these times, quite honestly, guys, I agree. I think they should do that. And this is actually, it could be a good sign for the stock in the short term. Either way, if it's not a good sign, if it is, we could argue that down below in the comments. Either way, that I think is good. And technically speaking here, Disney, it broke out of this upwards channel. You guys can see it here on the 4-hour. This is the initial channel we were looking at a couple months ago. It broke out of that and it formed into this little, I don't even know what to call it. It's like a channel, a wedge under the channel here. And it's been trading within that ever since the middle towards the end of June. And now we're actually approaching the bottom of this little wedge, and it's holding the uptrend as of now. So I'm thinking Disney has potential in the short term, despite the problems with the theme parks, 30,000 jobs being cut. A lot of them are part-time workers. Despite the dividend maybe going away, which I don't really care about. And I actually own Disney long term. I don't care if they cut it. I know, because I know in a couple years they'll just bring it back, right? And overall, I know that they're going to use that money to better the business from within rather than pay it out to shareholders. So despite all of that, I think there could be a short-term move here, especially if we're able to break this 50 SMA, break this 4-hour 50 SMA, and start to get back up mid-120s, high 120s. That could be breakout territory for Disney. So I'm watching it here, but again, there could be some risk involved due to the time period that we're living in. And IPOB is another one. And speaking of IPOB, IPOC is another SPAC here that's looking to take Clover public, but we're not going to talk about that in today's video. We're going to talk about IPOB, which is looking to take Open Door public, and both of these are Chamath Palihapitiya's. I don't want to say they're his, but they're his work, let's just say. I mean, part of his work. And I love that guy. You guys know that. I've talked about it here on the channel. You know, I'm an owner of Virgin Galactic. I believe in it. I think he's very innovative. He arguably could be, not saying that he is, guys, because there's still a lot of years for him to prove himself, obviously, right? But I think he could be on that Warren Buffett level. He very well could be this generation's Warren Buffett. I mean, we've heard that argument, and we'll see again how it pans out, but this is the type of mind that this guy has. So IPOB is one that I actually bought in a long-term account back at about $16. I bought about 100 shares there, and now I'm actually looking at it as a swing trade. I mean, take a look. It hit almost $20, $19.50 to be exact. It saw a nice pull down. It shook out some weak hands. We held the uptrend at a higher low. You guys can see it here on the 4-hour chart. And with today's price action up about 7.5%, we actually closed above a big level of resistance, right around 1740 to 1750. So I'm loving that here on IPOB, and if it holds this, guys, and gets into the 18s, I think that's a beautiful entry as a swing trade for this stock. And fun fact, if you guys didn't know, ARK Invest, which is ran by Cathie Wood, they actually own about 1.3 million shares of IPOB in the ARK W ETF. And I think that's if you go and look up the active ETFs from ARK Invest, I believe that one is the next gen internet ETF. That might be it. I could be wrong on that because there's 5 of them, but I'm pretty positive it's the next gen internet ETF. They own 1.3 million shares of IPOB. And the funny thing is, out of the 50 positions that are listed on the holdings, it's the 47th largest position. So they're getting in this stock, and knowing them, you know, they like to scale. ARK likes to scale positions. I don't want to say quickly, but they scale positions that they believe in. So knowing them, they could end up bumping this up even more, buy even more shares, and just bump it up from 47th to maybe 30th, 20th in the ETF. Who knows, right? But all we know now is they're buying, and they're really known for buying in innovative companies. So I'm liking that they're buying, that they own it. And that's not why I own it. I own it because I think it's going to change the real estate game 100%. I mean, the real estate game's already changing, going from, you know, seeing a realtor, doing this, that, the third, to online. It's more simple, right? It's simpler. So I think that's where we're going. You know, IPOB, I'm loving it here as a long-term investment. It's a bit more speculative. It's not going to be like a Johnson & Johnson investment where you know you're not going to, you know that's a safe place to park money long-term. I mean, you're not going to lose, probably, right? You're not going to lose a lot of money on Johnson & Johnson. But IPOB, hey, you could lose some money. You know, if things go sour, there's some speculation there, but I think with Chamath back there, putting a lot of money in it, believing in it, I think there's a lot of potential. So IPOB, and by the way, guys, let me know your thoughts down below in the comments. If you guys like the video, hit the like button and make sure to subscribe to the channel and get your 2 free stocks as well while you're at it. So IPOB, I'm loving it. Another one here is NEO, ticker symbol NIO. We've talked about NEO as a potential candidate to maybe pull down to the lower 19s, 1950 here on the 4-hour chart. You guys can see it, but it's looking like it doesn't want to do that. I mean, it seems like it held $20, like 2060 actually, 2070 as a pretty rock solid support ever since the 30th of September. Now we're actually breaking out of this other little mini wedge. Let me show you guys here on the hourly chart. You'll be able to see it. Now with today's massive move, I mean, we broke out of that. So this could, no joke, I would not be surprised if NEO was to see a massive pop. Maybe not 10%, but if it were to see another couple percentage pop, maybe to 22, maybe to go test that high from the end of September at 2260, I would not be surprised there, right? They reported strong delivery numbers a couple days ago. Off the top of my head, I forget. Was it like 12,000 or something like that? 12,000 delivered vehicles. They did well there. Let's see if we can see it here. It was up 154% in Q3 deliveries. There we go, 12,206 deliveries. So that's a good sign. And hey, we'll see if the technicals play out as they are looking like right now. We may see another pop up to, like I said, the mid 22s. And if it doesn't end up breaking out and we go back down to test $20.70, hey, that could also be a potential entry point, and we'll see what ends up happening there. So another speculative one here, which I haven't talked about in a little bit, is CCL. And let me tell you guys, back during the crash, I was like ridiculously bearish on the cruise lines. If you guys remember this, I doubt anybody remembers this, but I ended up, and I talked about it in the video, I talked about how I bought a $4 put on CCL. I was pretty much betting, and looking back, that was a pretty bad move, but I bought a $4 put betting that they were going to go bankrupt, right? That was my bet. I was kind of crazed. I mean, let me tell you guys, back during this crash, the crash, it was a crazy time period. You know, the markets were tanking 8%, 10%, 12% in a day, the indexes. You know, this was not a normal time period. So I got caught up a little bit, and like I talk about on the channel, don't invest with your emotions, and sometimes it does get even people that have been trading for years, it does nip them in the butt. And this is where I got nipped in the butt. I mean, I got a little bit emotional. I was watching the news too much. I was looking at CNBC too much, and I was like, this is gonna go bankrupt. The CV is gonna take over the world. No one's gonna go on a cruise anymore. This is what I was thinking, and I got the $4 put, and ultimately I lost a lot of my money there. I think it might have expired worthless. It probably did. I lost 100% there, and obviously, we did not go to $4. We actually rallied up to the mid-20s back in June. We've seen a massive sell-off from there of about 50% almost, and we found a strong base at $14. And the reason why I'm watching it here, guys, is earnings. Earnings are coming up tomorrow on the 8th of, obviously, October, at 9 a.m. here in Central Time. So this is actually good. It's going to report earnings pre-market. So we might see, well, I don't know, I think we definitely will see some volatility pre-market. And overall, I mean, yeah, their earnings might not be good, but if they're better than what's expected, if their guidance improves, if something comes out in the earnings call that's bullish, you could see the stock run up a lot. I mean, today it was up 5%, probably in anticipation of earnings. And I'm thinking if $16 breaks, we have a big gap to fill from $16 up to almost $19 per share, more like $18.30 per share, right around here. So yeah, check it out, guys. CCL, yeah, it's in a pickle as a business. The fundamentals are a bit shot right now, but that does not mean that we can't see a short-term move in the stock, as again, like I said, we're going to see volatility here. So two more, DKNG, guys. This is one that I wanted to buy today, but I held off as the NFL right now is seeing a spike in CV, and that's scaring me. I'll be honest, and that's kind of leading me from to not buy it quite yet, right? I know I said I had a price target at about $52. $50. Yeah, it did get there, but today we got even more news out of the NFL, and it's really the Titans' fault. I mean, and a lot of other teams, they're getting a lot of cases here, so that's scaring me a bit. And yeah, I mean, there's a little bit too much risk with this one at this point. I mean, it was down 6% as the markets were up a ton, so I'm not looking quite yet to buy it, but if we get more clarity on what the NFL wants to do here in the short term, I was hearing maybe like a 2-week break for the NFL, and then they're going to resume it, or if they don't do that, I mean, we have to see more clarity, and once we get that, I'll consider a position then. And hey, if we get low enough, maybe I'll buy a position anyway to just be a bit speculative. Let's say if we get to $45 and we don't have any clarity on what's happening with the NFL, maybe we get more spikes, whatever. At 45, I might consider buying a little bit there despite the risks. But hey, we'll see what happens here with DKNG. I still like it overall, but we need that clarity. And Snapchat is the last one that I'm liking here. They're reporting earnings on the 20th of this month, so in about 2 weeks from now, and they hit I think this is an all-time high. Let me double check for you guys. Yes, all-time high at $27.79. We just hit that yesterday. Now we pulled down a little bit today, but ultimately we're still holding this uptrend over the past couple of weeks. And the key level that I want to see Snapchat hold here for me to consider a position is about $26. I think if we pull down, we hold 26, 25.50, right around this 50 SMA on the 4-hour chart, I think Snapchat could be a nice entry into earnings. And for me, guys, like I've said for years on the channel, I'm not a big guy that likes to hold through earnings. I'm not big on that. I don't like, well, sure, my long-term positions, obviously I hold through earnings, but when it comes to my trading, I don't like holding through earnings. It's too much of a gamble for me. I like waiting until after earnings to see guidance, numbers, and so forth. But since Snapchat has about 2 weeks until earnings, we could see a play before earnings because there's a bunch of trading days before earnings. So watch out for Snapchat. And to quickly recap all the stocks we mentioned in this video, we talked about Intel, Virgin Galactic, Workhorse Group, Electronic Arts, Apple, Disney, IPOB, also known as Open Door, NEO, CCL, Carnival Cruise Lines, DKNG, and Snapchat, guys. So that's it. If you guys found value in the video, let me know down below in the comments. What are your thoughts? Let me know what you guys are thinking. Hit that like button. Subscribe to the channel, and don't forget to join our Strive Smart Discord chat. It's free. Same with the Facebook group, link down below in the description box, and also claim your 2 free stocks from Webull, valued up to $1,600. And again, that 2 free stock promotion ends on the 15th of October. All you have to do is deposit $100. You get 2 free stocks, and I also get 2 free stocks since it is an affiliate link. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out. And by the way, good luck in the markets.